Hello, this is the Tradesight U.S. Stocks and Futures Market Preview and uh, data checklist for Thursday, December 11th, 2014. Hope you're having a good week. Here's a look at the ES front month futures daily chart. You can see we had a big down day on Wednesday. Markets rolled over pretty sharply after a very small gap down, which we filled. Didn't look too bad early. Things were kind of choppy in the morning, didn't get very far. We rolled in the afternoon. Here's a look at the S&P cash index. So you can see where that's at. Obviously, well below the moving average, the 10 EMA. You can see we're approaching what was the breakout level back in October, September's highs. That's going to be potentially a little support here. NASDAQ side had some back and forth days after selling off a bit Monday and then gapping way down Tuesday and recovering and having a positive day. Failed at that moving average and now reversed it, went back to the downside here, king and queen type candlestick formation heading lower. Here's a look at the SOX. This is the semiconductor index, also lower, lost 12 points. By the way, the NDX lost 70. The S&P lost 34 for the session. Here's the biotech, still above the moving average, but they did lose 68 points, 69 points today. The VIX up a bit. This is the first breakout in the VIX for the first time in a while, back to 1853. So that's got the volatility up. The only disappointing factor in all this is that volume was weaker today. We had really, really poor volume for the first hour, and that led to a bad volume warning and really bad choppiness early. I'll show you what the action was like. It did pick up a bit in the afternoon. We did manage to get to 1.7 billion shares on the NASDAQ because of the afternoon volume. And a lot of that was as oil was selling off. And if we take a look at the oil, the crude oil here, it closed at $61.07. So a new low close for the year and for a long time on crude oil, potentially going under $60 tomorrow. All right, let's look at the ES. This is the 5-minute chart. So you can see, again, we'll gap down. Remember, yesterday we had gap down big, came back up and took all day and filled that gap. Today we gap down small, don't fill the gap, chopping around. And by noon, 2.5 hours in, we're only about 4 points lower than where we started. Really hadn't done much at all. And that held up for another hour or so. And then just before we ended, about 30 minutes before we head into the last 2 hours, suddenly we sell off. Now you look at that volume, you can see it actually picked up. This is on the futures contract, but that carried into the market a bit. The volume picked up in the afternoon. So we did have a sell-off for about an hour, then an attempted bounce that failed, and then closed near the lows of the day. Here's a look at the NASDAQ side. Same timing, slightly different outcome, right down near the lows of the prior session, of course. Obviously, we cracked that. This is an inverted cup and handle now over the last 2 days. So if you crack the lows of the last 2 days, especially without a gap, that is ugly. Should lead to some shorts. So we'll see what we get. We'll be calling it in the lab as usual. Charts brought to you by eSignal. And the other thing to remember is, and this is kind of going to be awkward timing, but we are rolling Thursday going into Friday. We are rolling from the December 2014 futures contracts. Those are the Z4 contracts. And we're going to be rolling into the 2005 contracts. So, for example, here's the ES Z4 contract in the daily chart. Actually, let's look at it on the 5-minute just so you can see what the normal volume day looks like. We're going to be rolling to the H5. That's going to be the March 2015 contracts. And you can see if I scroll sideways here, or actually even better, let me go to a 10-minute chart on this so you can see about 5 days worth. And what you'll notice is the volume has slowly been moving into this contract, right? So if you look at last Friday, for example, last Thursday, the first 2 days on this chart, there's no volume in the contract. Monday, a little bit of pickup as some players are starting to move into this contract. Tuesday, a little bit more, especially in the front and back of the day. Today, Wednesday, a little more consistent, like the most in a 10-minute bar, about 4,000 to 5,000 share contracts traded in one. Now let's go back and look again at the one we're currently trading, which is the December, and you'll notice obviously way more volume here. You're seeing 40 to 80,000 contracts traded every 10 minutes. So the volume is still here, but it's slowly moving into that new contract. So what will happen is between this Thursday night and Friday, all the big money moves out of this contract, and it will all be in. We'll keep tracking that for you on these reports, but it will all be in by Friday, the H5, the March contract. What that does is because it's slightly different pricing, it's a new quarter of data, there's usually a wasted day that the big players won't play while the money kind of slips into that contract, which makes Friday kind of dull, and it does tend to slow Thursday down a bit. So it's interesting that we're getting this breakdown here on Wednesday ahead of that, and it's going to make for some uncertainty with the money moving between contracts as this is occurring. But we'll keep an eye on that and let you know. Have a great trading day.